As Brent mentioned, my name is Andrew Westendorf. I'm with the Excel Group out of the Waverly office here. I've been a farm ag property insurance agent for about 15 years. And so the focus is on property, producers, farms, anything ag related. We really just wanted to take a few minutes to talk about some current trends that we're seeing in that space, in your farm insurance space. Big emphasis is on property, and by what I mean by property is construction costs. So if you're either building a building or reconstructing your farm site, what's that going to cost? And that's really what you want to get out of your insurance policy at the end of the day. Typically, construction, and if there's any general contractors in here, feel free to speak up, but construction rises about 2 to 4% a year. The last 2 years, each year has been 15 to 20% on construction costs. So if anybody in here's built a shop or a grain bin site, you realize how much more expensive that's been just in the last 2 years. I read an article yesterday, however, that roughly 75% of commercial properties are underinsured by 40%. So if you haven't done anything or thought about your limits, it's time to do that, just because of where we're sitting, okay? To combat this, insurance companies actually increase your coverage every single year. If you didn't know that, your structure coverage increases typically by 2 to 4%. This last year, they've increased that 8 to 14% just to try to keep up, okay? Not typical, but so if you see an increase on your property insurance, it's really not the rates, it's your coverage that has grown over the last 2 years. One thing that I want to stress, there's a general rule of thumb with insurance that you need to insure 80% of what you have. And if you don't, you can be penalized on what's called co-insurance. And so you do want to adequately insure your buildings and your machinery and the grain in the bin to be at that 80%. Next slide. I mentioned rates really aren't going up in our world, but there's a few things that the insurance companies are doing to change this or change your policies a little bit, specifically with deductibles. So we've had a run of bad weather, in the upper Midwest, catastrophic events. So we're seeing larger deductibles, especially when it comes to wind and hail damage. So you may see that your deductibles are changing, increasing. It's pretty widespread across the board. Next slide. As farms grow and there's diversification in what you're doing, it's very important to talk about your liability exposures if you're having some side businesses outside of your farming operation. So the most common that I see are seed and chemical sales, using your trucks for haul for hire, excavation, dirt work, field drainage tile, and then custom spraying has become very popular. So if you're doing any of these things, you need to have a conversation with your insurance agent for those, because your farm policy is not going to cover this. You need a separate general liability. And this is my last slide. I get repeatedly asked the question is, do I need workers' compensation on my farm? So if you are hiring farm fall and spring help, or you do have somebody year-round that's hauling grain for you, these are the rules, and they're set by the Iowa's workers' compensation law for the state. And there's really two types of coverage. You have your farm policy, and then you have a workers' compensation policy. The farm policy is only going to cover injuries to employees that we call exempt. An exempt employee would be any family member of any kind. Could be direct family member, in-laws, nieces, nephews, anything blood relation. Or if your total payroll is under $2,500. And that's not per person, that's total on an annual basis. So if you are paying help more than $2,500, you are subject to the workers' compensation law in the state of Iowa. So injury, you are on the hook for an injury, okay? So your farm policy, if you're starting to pay more in payroll over the course of the year, your farm policy is not going to do much for you because they're no longer exempt. You really should have a workers' compensation policy. So the question I get, well, I don't have any W-2 employees, I don't pay any payroll taxes, 1099, or I give cash. It's still a payment, and the 1099s don't get you out of that workers' compensation rule. So just be aware that any pay whatsoever over $2,500, you're subject to the workers' compensation rules. I have a document if somebody's interested in that. It's just right out of the code book that I can send you if you have questions on the workers' comp.